Hey, Scott Himmelstein with the Scott Himmelstein Group. Welcome back to our video blog. Today I have the pleasure of being joined by Zachary Schneiderman of the Schneiderman Insurance Agency. And today we're going to be discussing some of the myths and misconceptions of earthquake insurance. As we all know, we live in earthquake country. Before we get into today's topic, reminder, if you're a home seller, check out our free home value report. And if you're interested in purchasing a home, we have a free MLS search tool as well. So again, we're joined by Zachary Schneiderman of Schneiderman Insurance Agency. And we're going to be talking today about myths and misconceptions of earthquake insurance. And Zachary, there's a lot of misinformation out there about earthquake insurance, but it really is an important item to have, especially if you're a homeowner.
Yeah, absolutely. A lot of people ask whether or not they need earthquake insurance, or they look at the deductibles and say it's so expensive. And, when you think about the options, if you don't carry it, you're going to be out all of the money to repair your home, and you might have to take out a loan from FEMA to do so. Well, if you have, say, the old 10 or 15% deductible that earthquake insurance typically had, maybe that's all you have to borrow. And when you look at having to make a second payment on top of your mortgage that you have already to repair your home and to pay for those loans that you take out from one of those places, a lot better to only have 10 or 15% to have to pay back over time than to have 100% to have to pay back over time.
Right, and so that's one of the many reasons why, if you can afford it, it really makes a lot more sense to have the earthquake insurance. Now, obviously, with the California Earthquake Authority, there are a lot of recent changes since the beginning of the year when it comes to earthquake insurance.
Yeah, so the California Earthquake Authority started back a little after the 1994 earthquake, and they hadn't made a lot of changes to their coverage and their options since then. So you had only options of 10 or 15% deductibles, and the coverage, they had max coverages that they hadn't changed since 1994. It's a long time before they say, oh, well, inflation has changed. We need to up the amount of insurance we offer. So they added other deductible options besides the 10 and the 15%. There's now like a 5% and a 20%, and I think even a 25% deductible option. Plus, they raised some of the limits. So where you used to only be able to get, say, $25,000 in loss of use coverage, and if you're out of your home for longer than a few months, $25,000 is going to go pretty quickly when you're paying to furnish and live somewhere else. Now I think they go up to $200,000 in loss of use and more contents coverage. It used to end at $100,000, and now it goes up to like $200,000. So there's a lot more options available to you. But you also have to watch out for the pitfalls. A lot of people only know about the California Earthquake Authority, and they don't know that the California Earthquake Authority doesn't insure certain items. So detached structures, if you have a detached garage, a pool, a pool house, they're not going to cover that under the California Earthquake Authority, and they haven't. So you have to go to an outside company if you want to have coverage for those separate items or those detached structures, maybe like a Giavera or another carrier that does offer coverage to do so.
All right. So we've been talking with Zachary Schneiderman of the Schneiderman Insurance Agency. If you have any questions about earthquake insurance or any form of insurance, give Zachary a call at the number you see down below. As always, if you have any real estate questions, you can contact us directly at the Scott Himmelstein Group, 818-396-3311. That's 818-396-3311. And we look forward to seeing you next time on our video blog.